So is my video and audio both are clear, everyone? Audio and video both are clear? Okay. So let us fastly complete the chapter called as cost of capital. I will not take much of your time, I can understand. But still, even if this can help at least a good amount of students, it will be definitely very happy moment. So if this revision can help you, so let us do the fast revision, quick revision of cost of capital chapter. If you did find any time to do the problems on cost of capital, just spend 35-40 minutes in this particular session, we will complete. Okay, let's begin. So with regard to the cost of capital chapter, main concepts are cost of debt, preference, equity and reserves. Okay, and with regard to the cost of capital chapter, the summary of the chapter I will first explain. If you understand this summary, that more than enough from the exams point of view. Okay, see there. First one, what is this cost of capital chapter? Talks about valuation of cost of debenture, cost of preference share and cost of equity shares. Okay, next, whenever a question comes on cost of debt, that means whenever a question comes on the cost of debt calculation, which is called as KD. So the formula will be irredeemable debentures if they are, then I into 1 minus T by NP. If this is without a flotation cost. If the question contains a flotation cost, then instead of NP, NP minus flotation cost you have to take. Okay, NP minus flotation cost. So cost of debt KD irredeemable I into 1 minus T by NP. This is without flotation cost. If flotation cost is also given in the question, I into 1 minus T divided by NP minus FC. Okay, this is with the flotation cost. But one thing you have to understand, what is NP? Net proceeds. Net proceeds. Okay. What is NP minus FC? Always whenever I say flotation cost is applicable for new issue of debentures you make. Okay. Here NP represents issue price. Net proceeds on issue. Net proceeds on issue. Normally, if you calculate, NP is the market price, net proceeds in the market. So NP represents net proceeds in the market. Here NP minus FC represent issue price net proceeds minus a flotation cost. Okay. In case of redeemable bonds, KD calculated using the formula is a mere approximate. For accurate KD, one must calculate IRR. This is also called as a YTM model. Okay. So redeemable bond I into 1 minus T plus RV minus NP by N whole divided by RV plus NP by 2. This is without the flotation cost. This is without flotation cost. Next, with the flotation cost, now wherever you are finding NP, reduce the flotation cost from that. So I into 1 minus T plus RV minus NP minus FC divided by N whole divided by RV plus NP minus FC whole divided by 2. Simply wherever you are finding NP, deduct also the flotation cost. Deduct also flotation cost. Next, cost of preference shares, also called as a calculation of KP. Irredeemable PD by NP if it is without flotation cost, where PD is the preference dividend, NP is the net proceeds. If it is a new issue of preference share, PD by NP minus flotation cost. NP minus flotation cost. Next, if it is irredeemable preference share, redeemable same as cost of debt, instead of I into 1 minus T, we will have only PD because preference dividend doesn't have any taxation impact. Okay, same. Wherever NP is there, you need to write NP minus FC. Okay. Next, equity. KE calculation. KE can be calculated in different ways. Okay, KE can be calculated in different ways. Okay, let us understand. Already in the last class in the dividends chapter, we saw KE calculation like G equal to B into R. E into 1 minus B whole divided by KE minus BR. Or you can also calculate P naught equal to D1 by KE minus G. Okay, or E into 1 minus B whole divided by Ke minus BR. You can do that way. Or D1 by Ke minus G also can be calculated. So P naught equal to D1 by Ke minus G. Okay, Ke minus G to this side, D1 by P naught. So Ke equal to D1 by P naught plus G. That is one way of calculating. So if it is without growth with dividends, K equal to D by P. Okay, next, if it is with earnings, K equal to E by P. If it is constant growth, K equal to D1 by P naught plus G. Okay, if it is a new issue of equity shares, then K equal to D1 by P naught minus a flotation cost. Okay, plus G if it is with the flotation cost. Okay, next one, very important one, realized yield model. What model? Realized yield model. Sir, what do you mean by realized yield? Always, whenever you calculate the KE, you calculate on the basis of an estimate. You calculate on the basis of estimate. What you will estimate? D1 is an estimate. Okay. P naught is the market price already there. Growth is an estimate. Growth is an estimate. But realized yield approach is not an estimate. Realized yield is an actual return. I purchased a share today. I sold a share after 1 year by receiving dividend. How much return you got? That's called as realized. Really you got that yield. Okay, that's how that name has come. Next, CAPM, K equal to RF plus beta into RM minus RF. RF means risk-free rate, beta means a sensitivity of the security with the market, means how much the security will change if there is a change in market. For example, beta is 1.2, means what? If the market changes by one time, means market means Nifty points change by one time. For example, 100 points are there for Nifty. 100 became 105. So 5 points change is there. How much return will change on security? That's the beta. Beta is a measure of risk. Okay. RM minus RF is called as a risk premium. Next. So D means dividend, P means price, D1 means expected dividend, also can be written as D0 into 1 plus G. P naught is current market price, G equal to B into R. And this is in a percentage format. Next, cost of retained earnings. Cost of retained earnings, KR. Generally, KE and KR both are same. However, KE and KR will not be same in case of new issue KE. Whenever you are issuing the new shares, whenever you are issuing the new equity shares, KE and KR will not be same because new issue of equity shares will have flotation cost, brokerage charges, etc. Or to put it other way, in case of new issue, KR equal to KE into 1 minus flotation cost into 1 minus brokerage into 1 minus personal tax, not corporate tax. The shareholders taxation you need to take. So in case of new issue, KE and KR both are not same. In such case, KR equal to KE into 1 minus flotation cost into 1 minus brokerage charges into 1 minus taxation. Okay. Next, up to here, hopefully everyone understood the point clearly. Now, very, very important point I wanted to convey. Okay, very, very important point. I will not tell it is important, most important. This will lead to confusion in exam. That confusion we are going to clear. Okay, I'm trying to complete cost of capital chapter just in 5-10 minutes. After that, just practice practical illustrations at the end of the book. Okay, that's enough. So, note, cost of retained earnings and reserves uses current market prices but not the issue prices. Okay. So I repeat one more time. Retained earnings or reserves always uses current market prices but not the issue prices because reserves will locate the market price. Okay. New issue will take the issue price. Reserves are not on issue basis. Already they are there in the company. Therefore, market price will be relating to them. Tax in the formula represents personal tax, not the corporate tax. Next, how to adjust to flotation cost? Sir, flotation cost easy, sir. NP minus FC. That I understand. FC, if it is given in rupee terms, for example, NP 100, FC 2 rupees, 100 minus 2 rupees you will take. Understandable. But if they give FC in a percentage term, FC flotation cost is 2% they will give. On what you will take 2%? On market price, on par value? That question will arise now. Okay. If the flotation cost is given in rupee terms, we will directly reduce from the issue price. Then no doubt, clarity. NP, which is an issue price, minus flotation cost in rupee terms. Next, if it is given as a percentage, then two situations will arise. If the question is silent, means if the question has nothing to do with it, it is not indicating any of the factor how to take, then NP is issue price minus issue price into flotation cost percentage. Means generally percentage of flotation cost is applied on the issue price only. For example, issue price is 103, means 103 is premium. Okay, 3 rupee premium is also there. 103, for example, 2% flotation cost. How to take? 103 into 2%, 2.06 minus 103. 100.94 is the issue price. If nothing is said, like that you need to do. There is one question given in exam for 8 marks. In that question, they clearly mentioned that apply the percentage on face value. At that time, issue price into face value into flotation cost percentage you will apply. Okay, this is the point. Next, there is a concept called as book value and market value weights. Okay, I will tell how to understand this. Simply, whenever book value, market value weights is given, just it's a way of doing the WAC calculation. We understood KE calculation, KD calculation, KP calculation, KR calculation. All will be there in a company. Then how to do? Then the schedule is sources, amount, okay, proportion, individual cost, weighted cost. This is format. Source, amount, proportion, individual cost, weighted cost. Source, debt, preference, reserves or equity reserves. You will write the amounts here. Okay. Proportions you will take. Okay. Proportions you will take. If the amounts you have taken here are book value amounts, then the proportions you get is called as a book value proportions. Okay. If the amounts you take here is on market value, proportions you get here will become the market value weights. Okay. That means what you have to understand, when you calculate the cost of capitals here, ante KD, KP, KE, KR, it has nothing to do with book value weights, market value weights, because cost of capital formula always it will be a market value only. These calculations are taken at market value, but the amounts are taken at book value. The WAC, whatever you get, will not be accurate. That inaccurate WAC we call as a book value WAC. This is not ultimately correct. Reason, KE, D1 by P naught plus G. P naught market price. That means KE calculation market price you are considering, but amount you are considering book value, means there is an inconsistency in your answer. So WAC calculation will not be perfect. To make it perfect, they will take market value weights here. So those market value weights when you consider, okay, then proportions also will be on the base of market value. Those market values only we will apply. Okay, sir, what is so great about it? Easy only, na? Easy only, but try to understand one point here. Reserves is the controversy. Whenever you take book value weights, equity reserves will be separately considered. Okay, I repeat. See here once. How to treat reserves and surplus? Book value weights, market value weights. Book value weights, market value weights. Whenever book value weights are considered, KE, KR, KE, KR. Amounts basis la separately we will take. For example, 1 lakh is the equity amount. How much is the equity amount here? 1 lakh is the equity amount. Okay, wait a minute here. Okay, so I'm just looking into any question anyone is asking. Sir, first everyone confirm. Up to here, everyone had a clarity, yeah? Everyone had a clarity up to here? Clear? Okay. Okay, see here. Whenever you take reserves and surplus, for example, in the question they have given, reserves and surplus 4 lakh or reserves and surplus 1 lakh, equity 1 lakh, reserves and surplus 50,000 they have given. Okay, if they give like this, reserves and surplus and equity separately, the simple logic here, you have to consider 1 lakh to 50,000 separately. Okay, KE, KR you will apply separately. Proportions you will apply separately and you will calculate. Not a problem. But when the question is on market value weights, remember this. This is not the time to learn. This is a time to just reinforce your concept which you already know. Okay. The point what I wanted to here emphasize is, whenever the question is on market value weights, resource and surplus is given in the question, there will be separately resource and surplus not to be taken. You will take directly the market value of shares as total market value with including resource and surplus. Sir, I did not understand what you said. Okay, that be the case. I will give you a question such that you can really understand the impact. See here. See here once. I have no time to explain all these, and you have no time to listen all these. Just listen fastly. Book value 5 lakh. Reserves and surplus 15 lakh. Okay? Reserves and surplus 15 lakh. Sources, amount, proportion, cost, weighted cost. Correct? Sources, equity, sources, reserves, you have written. Amount 5 lakh, amount 15 lakh. Total 20 lakh. 5 on 20, 0.25. 15 on 20, 0.75. 0.75. That's it. Answer is over up to here. Okay, va? This is calculation of proportion of capital and resource and surplus or retained earnings. Step 2. Step 2. Calculation of proportionate value. Calculation of proportionate value. Sir, what do you mean by calculation of proportionate value? Market value of equity capital is given. What capital? Market value of equity capital. Whenever they give you reserves and surplus, okay, whenever they give you reserves and surplus and they ask you to calculate market value weights by giving market value of equity share, how much is the market value? 50,000 shares into 50 rupees each. What is that? 25 lakhs. 25 lakhs is the market value of the total company. Equity shares give market value. Okay. Whenever I calculate market value contains both equity as well as resource into it. On that basis only market value will be calculated. Okay. So simple reason. Equity share capital is the equity shareholder fund. Okay. Resource and surplus is the profit on the equity shareholder fund. Technically, that fund also belongs to the equity. Market value of yours means both should be added. Therefore, whenever you take market price, resource will not be taken again. We assume that it is already included into the market value. So, what is the market value? 25 lakh. Okay. Now, listen carefully. If KE, KR both are same, listen to my words. If KE, KR both are same. So if the KE, KR both are same, then problem will not arise. You need not separately consider resource and equity share capital separately. Directly sources, equity share capital. Okay, equity share capital. 50,000 into 50, 25 lakh you can directly consider. Answer will be completed. Separately, you need not consider. 0.25, 0.75 you will take. But if the KE and KR are not same, like in this question, if KE, KR both are same, directly 50 lakhs, 25 lakhs you will take. KE, some 10% or 10.41% you will apply and you will complete. But in the question, KE, KR both are not same. In that case, first take the market value. Okay. Divide the market value in the book value proportions. Okay. Book value proportions, how much it is? 0.25 and 0.75. So 25 lakh into 0.25, 6 lakh 25. 25 lakh into 0.75, 18 lakh 75. First consider those amounts. Okay. Equity proportion 0.25, retained earnings proportion 0.75. consider the cost of capital separately and then calculate this is the overall cost of capital. Okay, so what I wanted to convey here, listen carefully. I will write here itself. Remember this adjustment clearly. Exam la question can come. They have given you resource and surplus. They have given you resource and surplus. Asked you to calculate the book value calculation. They asked you to calculate the market value WAC. Book value WAC they asked. Sources, amount, proportion, cost, weighted cost. Sources, amount, proportion, cost, weighted cost. First, what you need to do? Sources, equity, retained earnings you will take. 1 lakh, 2 lakhs you will take. Okay. 3 lakhs you have taken. 1 on 3, 0.333. 2 on 3, 0.667. Okay. Like this you will consider. Okay. Like this you will consider. Cost. The independent cost. For example, equity share capital 10.41. Retained earnings 10. You will multiply and you will finally calculate. This is easy calculation. Resource and surplus, if it is asked to calculate book value, just you need to take the sources, amount, proportion, cost and weighted cost. Okay. Like this you will take the schedule. Next, market value weights. If this be the case, again look at the question. KE and KR both are same or not? Both are same. When KE and KR both are same, this cost is same. 10.41%, both the cases. Then what to do? Equity share capital. Number of shares into market value directly you take. Okay. Let us say market value is 20 rupees. 10,000 shares are there. 2 lakh rupees directly you will take. Okay. 1. Directly 10.41. However, if KE and KR both are not same, then what to do? First calculate the market value, 2 lakh. This 2 lakh should be divided between equity share capital and reserves and surplus in the book value proportion. Book value how much proportion? 33.33, 66.67. This 2 lakh will be divided for 33.33 on share capital, 66.67 on reserves and surplus. Take them separately and calculate the WAC. This is how resource and surplus adjustment has to be done in case of book value and market value weights. Okay. First, everyone tell me, understood the entire concept, whatever it is discussed or not? Everyone. Okay. So this is all about the cost of capital chapter, but listen carefully. See here. With regard to this chapter, I will mark certain questions. Without fail, please do them. Okay. Without fail, please do those questions. Fourth question. Fifth question. Seventh question. 4, 5, 7. Okay. Please do those without fail. 4, 5, 7. 4, 5 and 7. Without fail do those. If you can do those questions properly, that's it. More than that, questions will not come in examination. You will be safely doing those questions. Okay. So do those 3 questions, 4, 5 and 7. Without fail do those 3 questions now. Okay. Now Once I close the video, first work you have to do is put all other things aside. Put 45 minutes time. 4, 5, 7. Do those. Okay. So, and next thing, if there is any mistake in the ICI answer or controversy comes, write assumption in exam and do the answer. Okay. This is a point here. Next, like this, the next concept, I will go for the next area, ratios chapter. Okay, like this for the ratios chapter also, I will be selecting some important questions relating to the ratios chapter. Those questions you try to solve without fail. Okay, I will select some important questions in that particular ratios also. If you have already done, very good. If you did not do ratios already, so I will select some problems. Means that problems I will not tell that they will come in exam directly, but if you do those, you will confidently attempt the questions in exam. Okay, that confidence will build. Let us see what is the chapter, ratios analysis. Let us see. In this, first point number 1, this particular table contains all the important ratios. So this is a ultra speed revision session. Okay, this is not regular, this is not fast track, this is not even exam oriented. This is the ultra speed super fast revision of all the concepts. Okay, so just I'm going through the concepts such that you will build a confidence in preparation. Okay, let us see. There are 6 kinds of ratios totally. Okay, how many? 6. Liquidity ratios, capital structure ratio, activity ratio, sales profitability, capital profitability, miscellaneous. First, liquidity ratio. Some important observations let us make. Liquidity ratio, current assets by current liability. Current assets by current liability. Liquid ratio, liquid assets by current liability. Denominator la current liability is common. First category la current assets will be there. Second category liquid assets will be there. What is a liquid asset? Current assets minus stock minus prepaid expenses. Current assets minus stock minus prepaid expenses. Okay, current assets minus stock minus prepaid expenses. Logic, don't ask me. Simple logic. Yeah, stock is not directly converted into cash. Stock should become debtor, debtor should become cash. So it takes a lot of time. Okay, so therefore it will not be considered as a liquid asset, it will be considered as a current asset. So therefore current assets by current liability. Current assets means every asset other than fixed assets will be the current assets, or assets which are kept for less than 1 year are all current assets. Next, capital structure ratios. Okay, with regard to the capital structure ratios, about the balance sheet liability side we will discuss more, or liability and asset investment also we will see. Capital structure theory, debt equity ratio, debt by equity. Here debt means a long term debt. Okay, equity I said, not equity share capital. In this equity preference everything will come. So share capital, equity share capital, preference share capital, plus reserves and surplus minus miscellaneous expenses. Equity also known as net worth, shareholder fund or proprietor fund. Preference share capital is deemed as equity. Okay, so whenever I say equity, equity represents equity share capital, preference share capital, resource and surplus minus miscellaneous expenses. Propriety ratio, equity by total assets. Equity by total assets means in the total assets of the company, how much is purchased out of owner fund, how much is purchased out of the debt funds. This ratio will help us to know about it. Okay, so that's called as a propriety ratio. Propriety ratio represents in the total assets of 100 rupees, how much is invested through equity, means through owners, how much through owner, how much through lender. If this is 70%, lender is 30%. If this is 20%, lender is 80%. Okay. Next one. Capital gearing ratio. Capital gearing ratio. This is similar to debt equity, but not completely. Okay. Capital gearing ratio means debt plus preference share capital by equity. Okay, sir, when I say debt plus preference share capital, they mean to say these are all the fixed committed capitals. Means I have a responsibility and an obligation to pay back debt after time. Preference share capital also after time, divided by equity. When I said debt plus preference, in this calculation, preference is also treated as a debt. Therefore, in equity, preference share capital will not come only in this formula. That's why this question became important in exam. Capital gearing ratio. What is the formula? Debt plus preference share capital by equity. Okay. Debt plus preference share capital by equity. Debt, fixed commitment. Preference, fixed commitment. Equity, non-fixed commitment. Okay. So equity here does not include preference share capital. Next, debt service coverage ratio. Debt service coverage ratio. Debt service coverage ratio means what? EBI DTA, earnings before interest, depreciation, tax and amortization divided by interest plus installment. Next, activity ratio. Which ratio? Activity ratio. So these ratios are very important among all the ratios. Okay. Which ratios are most important for exam? If you ask me, with no stretch of imagination, I will tell activity ratios. Okay, I will tell activity ratios. First, see all these formula first. I will make it full screen. 2 minutes. Visit all these. Okay. Have you all completed? Okay. See here. Activity ratio. The first activity ratio is capital turnover ratio. Capital turnover ratio. Whenever I said activity ratio or capital turnover ratio, it's simply turnover will come. Turnover means sales turnover will come in numerator. Will come in numerator. Same for in case of profitability, the sales will come in denominator. Okay. So listen. Capital turnover ratio, turnover by capital employed. Whenever I say capital employed in your business, or our business. Okay, in the own business is the meaning. Okay, whenever we say capital employed represents capital employed in our business. Okay, so what is capital employed? Equity plus debt, also called as, this is from the liability side. If you see this from the assets side, equity and debt, money raised by equity, money raised from debt. Where you will put that amount? Fixed assets and current assets. Fixed assets, current assets minus current liability, or fixed assets plus working capital. Okay. Capital employed should not include investments made in other company shares, because that money return is coming not because of your efforts, because of other company efforts. Therefore, in our business, that is only should be considered. Next, fixed assets turnover ratio. Fixed assets turnover ratio. Capital turnover ratio, sales by turnover. Sorry, sales by capital employed. Okay. Next, in capital employed, some amount I will put in fixed assets. That's the fixed assets turnover, sales by fixed assets. Working capital turnover, sales by working capital. Very, 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 very important. The most important one, debtors turnover, stock turnover, creditors turnover. Very, very important. Almost every question in exam will contain these three. Every question in the study material, if you do, illustrations are 8, practical questions are around 14. And 22 questions are there. 22 questions, around 20 questions have this adjustment. Which one? Debtors turnover, stock turnover, creditors turnover. Literally mug up here. You have no time now. If you already have done, if you normally if you have taken my classes, lesson, everything, you practice. No, okay. Sir, I don't have time, sir. What to do? Mug up this. Mug up this literally. Okay? Gada 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 mug up. Remember, in some or the other way. Okay? You will definitely get marks. So, what is this concept? Debtors turnover ratio. Debtors turnover ratio. This can be written in three ways. Sales by debtors. Sales by debtors. Logics, everything, don't ask now. Next, sales by average debtors. Average debtors means what? If 2 years data is given, then average debtors you have to calculate. Next, if you want to express the debtors in number of days format, debtors into 360 by sales. This is very popular question in exam. That's why third formula is expressed in period. Period of days, period of months. Like that they will express this. Okay. Three formula. Tell me, what is the debtors turnover ratio formula? Sales by debtors or sales by average debtors or debtors into 360 divided by sales. This will be expressed in number of days. Okay, means how many number of days your money is blocked in debtors will be given under this formula. These three formulas are very, very popular. 4, 5, 6 are extremely popular even in the working capital estimates chapter. Next, stock turnover ratio. Stock turnover ratio. Sir, whenever I say stock, we assume that as a finished goods stock. Finished goods stock is in the go down. Means administration selling overheads are not yet incurred. Therefore, you will not take sales. You will take cost of goods sold instead of sales. So, stock turnover ratio, COGS by sale, stock or COGS by average stock. If you want to express how many days your money is blocked in the stock, stock or average stock, if 2 years data average, 1 year data stock by sales into 360. Okay, this is the point. Creditors, same, purchase by creditors, all these things is same. Everyone who joined live, reply, everyone understood clearly. Okay, yeah. Next, profitability ratio. Sales comes in denominator. Gross profit ratio, gross profit by sales, net profit by sales, operating profit, EBIT by sales, COGS to sales, COGS by sales. Return on capital employed. Return on capital employed means capital is employed, equity and debt. Return means what? For capital employed, equity, debt both will be there. Equity asks for PAT, debt asks for interest. Therefore, PAT plus interest by capital employed. Return on equity, return divided by equity means PAT divided by equity. Okay, PAT divided by equity. So there is another question called as a return on total assets. Return on total assets. Return on total assets means return divided by total assets. Return divided by total assets. Total means fixed assets and current assets put together. Return on total assets. That also will be considered. Okay. So remaining earnings per share, EPS, earnings by number of shares, dividend per share, total dividend by number of shares, MPS, market value by number of shares, dividend payout, DPS by EPS into 100, all the remaining things you know already, PE ratio, everything. Okay, that's it. These are all the various concepts that we need to remember in that area. But with regard to the questions, now what you need to solve after my discussion is completed here, what questions you need to do? I will mark some questions. All of you, if you have already done ratios, very good. If you didn't do it, these questions at least to do. Okay, at least to do these questions. Illustration 4. Illustration 4. Illustration 2. Okay. Illustration 2. Illustration 4. Illustration 6. Practical question 2. Practical question 5. Practical question 7. Practical question 8. Practical question 10. So I am writing the questions one more time. Each question 5 minutes. 2, 4, 6 illustrations. Don't do, just see at least 2, 5, 7, 8, 10 practical questions. 3 questions 20 minutes. 5 questions 30 minutes. Max of 40 minutes. 1 hour ratios chapter should be completed for you. Okay. From now you have to do this. In 1 hour time, you have to complete all these. Okay. 45 minutes, 35 to 45 minutes for cost of capital. Practice those. And 1 hour for this. 1 hour 45 minutes. By 12:30, 1 o'clock, you have to complete all this. Okay. Then success will be yours definitely. No worry. Okay. So I will not take much of your time. I know the emergency of your preparation. Okay. I am signing off. All the very best. Okay. For working capital also, I will just put some important questions. You do those. Okay. Do those. I will just put some important questions there. You do those. Okay. That's more than enough. Let's not waste time here. Don't waste time. Okay. So with this, I will stop the lecture. All the very best for your examination. Give your best. Be confident first. What you don't know, what you didn't learn about that, don't think. First to do whatever you have already completed, because what our psychology will always say, I did not prepare this aspect, I did not prepare that aspect. We will think that all what we learn didn't learn will come in exam. No, maybe if you don't learn some aspect in that, one question will come, but for that one question, don't leave all the other questions. This is not the time to lose the confidence. This is the time to gain confidence. Clear? So prepare well, give your best. Okay, I should listen a good news from all of you. All the very best for your examination. Okay, God bless you all. Love you all. Prepare well, do well. Please don't sacrifice anything for exams. Are you understanding or not? Please don't sacrifice other things. Sleep properly. That does not mean don't sleep. Don't sacrifice your sleep, or in exam theater you will sleep. But the thing I wanted to tell is, maximum this time only 4 hours sleep you put. After coming from exam, you sleep whatever time you want. Don't completely sacrifice, but have only 3.5 to 4 hours sleep for today. Prepare FM properly. That's a scoring paper. SM you will do well. It's a theory paper, not a problem. FM prepare well. Okay. All the very best. Thank you. Don't stay in live. Everyone go out. Continue with your preparation.